back to Market on Close. It's time for Overlooked Stocks, so we'll welcome in George Tsilis, our senior markets correspondent here on Schwab Network. George, today we're looking at Porch Group. Goldman Sachs initiated some coverage of them, sending them up to a 52-week high here. What is Porch Group, and what's the big driver here? Why the initiation and coverage?
Well, it's actually quite an interesting company. I think in the context, Marley, with the home market actually being slow, we are actually seeing, companies develop, their tentacles across the homeowner and, of course, the home builder aspects of the real estate industry. And Porch is one of these companies. It's actually a software company. They're vertically integrated. They basically provide, services like insurance services, warranty, home care services. They also provide maintenance and repair operations, rental services for existing homeowners, but at the same time, like move-in services and things of that capacity. And then they also help homeowners who've actually moved into their home, find connections to contractors that help maintain their home. So they're vertically integrated across the board. They serve business-to-business communities and businesses with around 29,000 existing in their network. And essentially, they do services from insurance all the way down to, maintenance repair services for homeowners. So it's vertically integrated. So it's got a business to business, but also business to consumer standpoint. And they do generate fees from the transactions that are used across their software platform. But the other thing is if you look at how they've been actually expanding their underlying top line sales, about 40% of title services, home inspectors, about 40% of home inspectors use their software now to book their home inspections. And so they're growing, horizontally, but also vertically in the home buyer and home inspection business. But the insurance services are still their primary bread and butter. They provide underwriting for homeowners, warranty services, and so forth. But interesting, this is certainly an overlooked stock because it's not a very large company. I mean, its market capitalization is around $1.8 billion, even after it's made just a tremendous move going back to October of last year, where the stock was trading around $1.50. So this is more than 10x since then. It's really a function of expanding its network effects, getting more users on the platform, more customers also on the platform. And the other thing is once you start selling a service and a software, it's very scalable, but at the same time, the company actually has a lot of data they're aggregating within the context of the home buyer market. And that data is very valuable from the licensing standpoint and providing access to that database, which is also what they do in generating revenue. And so with that said, Goldman's actually upgraded the stock. They actually have it now at a $21 price target, a buy rating, and they continue to see growth in sales and earnings for the business, which is becoming more scalable. I mean, you look at the stock, too, just quickly going back to when it was in 2021, it was a reverse merger via SPAC. During that time, the SPAC frenzy was huge. A lot of the names fell considerably. This one fell into a trading range from around $1.50 to $4, but it finally broke out of that trading range in October of last year. And I talk about this all the time on this segment, that what you want to do is technical breakouts from a basing pattern follow income statements. And one of the things you'll notice if you follow the income statements that the company achieved a break-even position in terms of profitability on an adjusted basis last November when they reported earnings. And since then, it's just broken out of that trading range and been continuing higher since then over the last 4 quarters.
And as we start to see, more optimism and analyst coverage here, I'm looking at their price target range, about $16 to $22, averages at just over 18. Today, they touched 17, so they're at 17.85 right now. Do you expect that we're going to see, more price target increases, noting that they've had this improved performance today?
Yeah, I think so. I think if you just consider the nature of the business, this is not an open door, which is essentially, got caught in the home buyer market. It would buy and sell inventory. That's a lot of risk, a lot of balance sheet risk. This is not necessarily a, home builder. It's not a real estate company per se. It's basically a vertically and horizontally integrated software suite. So that's where it's all encompassing. And if you look at the trajectory of sales, for the business, just going back to 2020, there was about 72 million in sales. Now it's over 470 million. And what's more important than not is what's happening with the bottom line. And in the last 4 quarters, you can clearly see they become adjusted profitable. And that's what's really important. And the most profound moves or very impactful moves in stocks after a base breakout, not just on a technical basis, but it corresponds to the pattern on the bottom line income statement, which is positive and growing. And so what it's worth, yeah, it's made a nice price move. It doesn't necessarily mean it's going to completely give up that gain, but the company is now profitable, and they're only expecting to be profitable at 1 penny per share this year. But then going into next year, it's around 14 cents. So the stock isn't trading at a considerable premium to next year's earnings. And I think that's why Goldman is now looking at this as still attractive, irrespective of the fact that it's up about 1,200% since last late October.
Well, George, we appreciate you breaking all of that down for us there on Porch Group.